Imagine this: a company that once stunned the global EV community by delivering the most efficient production electric sedan ever tested, a company whose proprietary motor design was so compact and powerful that engineers compared it to aerospace hardware, a company backed by one of the wealthiest sovereign funds on earth, now trading barely above $12 per share and clinging to the lower boundary of its 52-week range as if gravity itself were punishing the very ambition that once made investors dream. And before we go any further, if you are watching this through Shorts, tap the link below to hear the full uninterrupted version. There is a complete trading strategy in the second half of this episode, so stay with me all the way to the end, because that part alone may change the way you see this stock. Imagine being told in 2021 that Lucid Group could become the next American automotive titan, only to watch 4 years later as the same company issues almost $1,000 million of high-interest convertible notes just to extend its survival runway. Imagine the shock of seeing a firm that raised billions on engineering brilliance become trapped in a cycle of persistent losses so severe that every quarter feels like a countdown rather than a breakthrough. Investors know this emotional swing well because it is not abstract. It is the lived reality for anyone who has followed LCID from its golden days through its most recent struggles. The story begins in 2021 when Lucid went public by merging with Churchill Capital IV through a SPAC deal. Under normal IPO conditions, automakers list once they have proven production lines, reliable revenue, and stable cost structures. SPACs flip that discipline and allow a company to go public on projections rather than production. Lucid raised roughly $4,000 million during the listing and promised a revolutionary powertrain, a proprietary battery pack design, and a luxury platform aimed at surpassing Tesla, Mercedes, and Porsche. Back then, investors believed they were witnessing the birth of the next great American automotive brand built around vertical integration and engineering purity. But when Lucid shifted from prototype manufacturing to full-scale production, the dark reality of vertical integration surfaced. In the automotive world, it is standard to outsource major components such as motors, inverters, electronics, and software modules to specialized suppliers who cut costs through scale. Lucid rejected that strategy. Determined to control every single piece of the value chain from motor winding to inverter topology to battery modules, it built everything in-house. The result was beautiful engineering and catastrophic unit economics. Through 2023 and 2024, the company repeatedly tapped capital markets. Around